Welcome back. Doing a little final hour session here just after 3 p.m. Uh, Headline for the day thumbnail is Ethereum better than Bitcoin? I just closed out a trade today on ETHA that was owning some shares of an Ethereum based ETF. Had a run of about 47%. And that was only in about 2 weeks and 1 day. So I do think there's more upside. I might actually take a fresh trade if we get a dip, a pause, or a pullback, but I want to talk about that because in the performance of Bitcoin versus Ethereum, lately the stock has been, or the comparison has been favoring Ethereum in a big way. So we'll talk about that. Also have a new format to my morning sessions. So here is my Telegram. And every morning at 9 a.m. Eastern Time, if you'd like to join me, this is free for everybody. If you'd like to join me for a daily profit room session every day, Monday through Friday, 9 a.m. Eastern Time, I just posted here. So this is a chance to jump in live, build a nice big community. You'll get daily nuggets, lessons, trades. I'll be able to, touch base on all my services here with these live sessions. Today was a big picture. We had a lot of education sprinkled in today. We were live for about 2 hours. Day to day, we'll actually distill it down, concentrate it into more, specific lessons. Like tomorrow, I'd like to go into something really straightforward, like building a core position, taking care of. I want to do tomorrow's lesson on like calculating break evens in your trades. So whether you own a stock or trading options, know your break evens. I think it's gonna be a good lesson for tomorrow. We had a discussion today on the guardrail trade, which means I'm essentially looking to see where the market every day, every week, every month, every quarter, every half a year, you can go out in time as long as you want on an options chain, and you can see what the brokers, what the market makers, what the expected move is supposed to be, and you can look to see whether or not you want to be a buyer or seller of those options. So this information here, this is a really ugly screenshot, but basically in the live session, this all made sense, like bit by bit, sentence by sentence, and it all built up into a full understanding of what these markets do on a day-to-day basis. And this is from 1 day all the way to a year plus. You can do the same concept of trading math and probabilities and a systematic way to approach the options market every single duration that you trade, all based on the same numbers. And the only thing that goes on top of this would be you add the element of volatility, whether in a low volatility environment or a high volatility environment, all these things go hand in hand. So I think it's a great lesson. I know it might look like a lot, on the surface, like what is he talking about? It looks like a bunch of scribbles that make zero sense. But I promise you in the live session, it will make sense bit by bit. Okay, so I want to get into Ethereum and Bitcoin today. Let's talk about that. Let's get into the markets. We had a nice recap today. Ended up grabbing some net profit of about $100, which if I were to hold the trades a little bit longer, I can give you exactly what my trade would have been. It doesn't really matter what would have been and what matters what is. But my trade that I took this morning would now be up around $1.20. So that would be $120 this morning. And then this trade would be trading for, oh my gosh, that's crazy. 180 down to $20, $1.60. So that's 320. Wow, big difference. So the difference of I made about $100 today, and now as I'm doing the session at 306, that same trade that I set up this morning on Daily Profit Play and Daily Profit Room is now worth about $440. That's the beautiful thing about zero DT is when you're right, you're way right. When you're wrong, you could be way wrong. So the compromise for me is I was looking to manage risk this afternoon to make sure I wasn't sitting here hoping that prices to stay above or below a certain level for me to make money. I had about $100 in my pocket, so I took it. And just because the market cooperated a little bit for me, that quickly accelerated into a nice big win. I'm sure I'll talk to some traders tomorrow morning that stuck this out and rode this thing out for maybe $300-$400 profit, which is awesome. So I'll see all those traders, maybe now or tomorrow. That's fine. What's up, Donna? How are you? And this trade just keeps getting better and better, by the way, because what we needed to see today is what I talked about this morning. I wanted to see some guardrails today around 63.30. Well, we end up poking 63.35, 63.35. I mean, you hit it here where my cursor is. You hit it here again. You hit it here again. But we've rolled over late in the day. Now, the market started here around 63.04, and now it's only up about 17 points plus or minus on the day, which lo and behold is probably right around where the plus or minus move in the day was. We probably had like plus minus 20 points today, and right now it's back and forth between about 17 points. So kind of crazy how that works, right? It's not crazy. It's market makers doing what they do best. So it was a pretty aggressive bullish run in the morning, and then you can see late in the afternoon it just gave some of it back. So now what was up, roughly 30 points, let's say, up 30 points. Now it's only up 17. So the market kind of cut the gains in half. It's still positive on the day. We're still looking at green. Markets did gap higher and remained higher. So tail of the tape looks pretty good. S&P's up 0.4%. NASDAQ up 0.7%. Dow is up 0.3%. Russell's actually flat on the day. We look at the VIX. VIX is at 1648. Just a lot of chop. The VIX was steadily down all morning. So this is where I started trading this morning around 9:30. And the VIX was down all morning, and here we are giving some of it back as the VIX is kind of hanging out around this, kind of the 16.3 handle. We didn't really get too much lower than that. Last week, we did see the VIX spike down or fall down to like sub 16, but these markets are still looking at maybe that implied move of like around 1% every single day, and this morning, we didn't quite have that move. Here's some more guardrails. I called a potential top today at 63.60. We didn't quite get there. We had the guardrails run at 63.20 to 63.30 hold really nicely. The floor on the day, 62.30. The market obviously didn't fall. The VIX didn't rally. So we just came up, paused, and then we're starting to drift back down. I still think in the near term, the 6,300 handle is key. This week we have earnings that do matter. I think earnings going out to this week, I do want to take a look. We've got Lockheed Martin, Coca-Cola, Philip Morris, D.R. Horton. I want to take a quick look at those in today's session, as well as tomorrow's daily profit room, and looking for a touching point on newsbreakers. Let me see if we can price out some trades tomorrow in a segment and see if we can get some trades running on possibly Tesla, Google, IBM, Chipotle, maybe O'Reilly. It depends. I mean, there was a big split on O'Reilly. I was looking for a top in that one around the 1400 handle. Then they split, so they're now trading. I think they're trading under $150 now. Alaska Airlines, and then before open, Blackstone, American Airlines, Intel on Thursday, which could be interesting. Deckers has some high volatility. That's I think it's UGG and Hoka shoe brands, and I think that's about it for right now. And then next week we have Mag 7, Apple, Amazon, Microsoft, Meta, all coming in next week with earnings. Okay. So what a difference the afternoon makes. I mean, this final little bit, if anybody's still holding, do I have any daily profit play traders still holding? If so, you got to be looking pretty good. This trade from the morning, I mean, you got a 185 credit that's trading down for a dollar, or not even that. $1.85 is now trading for 10 cents. I mean, you're taking like 90% of the profit. Take it, right? And then the trade I took this morning at 190 is now down to 40 cents, 30 cents. So that's $150 to $160 a contract. This one is around $170, $180 a contract. Good win on the day. So all in all, the goal is win the day, and we did. And also I had some fresh highs in the day, which is nice. So fresh highs on the day, fresh highs in the year, and I continue to march along and see what the rest of the year or the rest of the week gives us. Okay. No major news that I'm seeing right now. I mean, markets are probably going to be, hit record highs lifted by Alphabet. Really? Okay, well, the market's giving some of it back. So what did Google do today? Google's up. So pre-earnings, we get a bit of a run-up on Google. I do have some ratio spreads exposure. Here is Google for my portfolio, GOOGL, right here. So I do have some shares. I do have a ratio spread. Right now, this is up 91%. I probably should close this trade out probably now. The 105 by 100, I'm up 91% of that max credit. I might as well take it. This one is up $200. This one, I'm going to close out 135 by 130. I can just let this one run. 14 times 7. Let me see what that risk is. So 0.14 times 7 is about $1. So that's about $100 risk. Okay. I might just, let me unhook this one. So December, I'm going to ungroup this. And then this trade is a ratio spread. So I'm going to go ratio here. There we go. So that's a long put for protection. This one, same thing. Take this one out. Ungroup. Ratio. Okay. So ratio spread there for 232. Ratio spread here for 230. Ratio spread here for 278. It's up 206. I'm going to keep these ones. I think I'm going to keep this a little bit longer. That one still has a little bit more to go. I wouldn't mind actually taking Google, but I just don't want to see it beat up too badly. Hedge, these are fine. These are fine. Okay. So up about, I think these for the 105 by 100, these are unlikely to come back. I'm going to close this one for a winner. So winners this week, I have ETHA for 46.6%. That was a 1977. Closed it out at $29. I'm going to close out Google. That's a 135 by 1. Actually, no, the 105 by 100. And that is 230. And hopefully close it out for like a 10-cent debit. See what this will close for. That one should be good. This one, I'm going to go close 20 cents. Yeah, I guess that's right, 210. So I'll wait another day on this one. Since we had a nice little run on Google today, I'm going to see if I can close this one out tomorrow. Try to get maybe 20 cents or less. Let me see if I can close this one out for, let's go 20 cents here. So this trade, 280. This trade, 230. Let's close this one down for 210. So that'd be a 20-cent debit. 20-cent debit. See if that will fill. All right, I'll let that marinate for tomorrow. So that one's good. This one, close this down for 20-cent debit. Okay. All right, 20 cents debit. That should give me 210 profit per contract. This one here. This is in Project Options Edge, by the way. So if you're my Project Options Edge, I'm going to issue this trade for 20-cent debit. See if we can just win the close. So I'll update that Telegram in just a moment. This one's fine. This one's still running. Okay. So that should be it. There. So these hedge positions that are just way out there, and then the rest are all ratio spread. So that's Google taking a win. Hopefully I can close that thing down for 20 cents. And they have earnings on Wednesday morning. Or I'm sorry, Wednesday afternoon. So after close, you'll see that price action reflected on Thursday's opening bell. Tesla, Google, IBM, Chipotle. Watching those specifically for this week. There's some other ones, but I'll price these out. So I'll take the time. We'll have a segment on this tomorrow for newsbreakers, and we'll price this one out. Okay, what else we have here? Ryan says, really noticed a real difference in the retail stock group this week. Big flip using calls, which is something I haven't seen. Okay, they're buying puts. I mean they should, because puts are dirt cheap, and the market's been overextended for the last, certainly the last like 30 plus days. I mean, I'm not saying we didn't have like a bullish month in July. It's typically a bullish month. I'm just thinking that we get hit with a little bit of a pause or a pullback, and I think it'd be smart to basically have some cheap hedges. It's not that hard. Two close just took off the limit order. Nice $1.40 to $1.40 at 65 cents. Good trade. Big shorts hit the tape. Nvidia today, August expiration. Yeah, we'll see. I mean, we'll see some position. Let's check the put call ratios. Let me go. I've got a blank workspace here. So we are, I mean, definitely seeing way more call action. So this has been trending lower. A lot more call action than put action as the market is at highs. This is the S&P. Okay, so there's your S&P, there's your money supply, and we're sitting here with lots of call option volume. So anytime we start to see call option volume get into this lower quadrant, or I guess lower level, then I get a little bit more cautious on the market. In the middle, obviously anything goes, and up here when it's extreme, this is your put to calls, right? So this is extreme sentiment on the puts. This gets a little bit more steady and extreme on the calls. So I think we just have a little bit of a ventilation coming. That's really it. I mean, pullbacks could vary between 3-5%. They could get as extreme as 10+%. I don't see it going too much lower than that because the market has spent so much time above the 200-day moving average now. So just looking at my overall market, 21 moving average, 50 period moving average, there's just a lot of support in distance between these moving averages. So even if we have the market pulling back, I think the market, maybe has pullbacks into the 50 to 200 day, but very well supported here at the ceasefire gap, very well supported here at the U.S.-China trade agreement gap. If we do have a hard deadline August 1st, I could see the market rolling over a bit harder. I don't know if the market needs the Fed to cut rates, continue to go to all-time highs. Maybe it does, maybe it doesn't. It looks like we're going to have a dissenting opinion this July, so July 30th. We might have some Fed speakers claiming that they should see the U.S. cutting rates sooner than later, and going against kind of the grain of Jerome Powell, where he's looking to maybe cut in September. But CME, the watch tool is still suggesting a pause for the month. Yep. So, I mean, it's still 97.4% probability the Fed doesn't do anything this July, which is next Wednesday. And then September, December would be the two cuts for 2025. That's what the market is anticipating right now. Does that change? Bank of America just released a statement, said they don't see the Fed cutting rates at all this year. So I mean, obviously there's a dissent somewhere, whether it's inside the Fed or it's with investment banks or what macro analysts think the market's going to do or not do, what the Fed's going to do, not do. You don't know. These are probabilities, not certainties. So probability is good. 97% is a pretty good probability, but doesn't mean it's guaranteed. I would imagine the Fed doesn't do anything in July. You might have a different opinions. You might see that some Fed speakers speak out. I'm not sure if this is going to be a dot plot for the July 30th, and if so, where does the Fed speaker, the dot plot? Let's go to the chart here. Okay, so if we get a dot plot, see this is updated when this would have been published on June 18th. So I don't know if we're going to have a dot plot updated on July 30th or this is going to be September. But this is where most of the policymakers are seeing rates for the end of the year. So according to this June 18th dot plot, most of the Fed is either holding or down to like that, 25 basis points in September, 25 basis points in December. And this is where most of the Fed sees rates right now, right around that 3.75 handle. So that's 50 basis points a cut. So one cut at 25, one cut at 25 gets us down to that level for the rest of the year. Okay, 2026, everything kind of shifts. There's continuing to look for another maybe 2 to 3 cuts by the end of the year. So 2026 only has about 2 to 3 cuts kind of baked in right now. With Powell, if Powell is going to be either one removed, which I hope he doesn't. I hope he just kind of stays the course, finishes his term, and he can possibly be replaced. I think the question right now is if the market's going to keep the credibility of the Fed. If somebody steps in that's truly a yes man, that's just going to be a sycophant to Donald Trump. I don't like that at all. I think that's a terrible look for the Fed. I think the Fed loses credibility if you come in and you're just doing the bidding of the president. So I'm hoping that Powell can just stay the course, get the Fed behind him, try to have some unanimous front. I know they might be behind. I know that there's arguments right now the Fed is behind and the job market is slowing and the labor market is slowing, the housing market is slowing. I get it. I still think it's good to cut rates. If you cut rates and inflation continues to go higher, which it has been going higher, it has been stickier. I just don't see that being a good thing because even though, I mean, think about this. When you hear inflation, okay, let's go to Trueflation. Let's get a reading here. So Trueflation. Right now, so we went from this recent high to this recent low. That's a big drop. Okay, you go out a little bit further. Let me see if I can go out to like, I can't update that. Fudge. All right, so back in, this would be December of 2024, we were up to around 3% third-party Trueflation reading. Okay, that dropped all the way down to 1.22. We did see inflation trending lower. Look, this doesn't mean that inflation is going down. All this means is that prices are going up slower, right? So this means that things are more expensive by about 3%. This means things are getting more expensive by about 1.2%. This means things are more expensive by about 2%. So there is still inflation. We always have inflation. It just hasn't been front and center in our daily lives and on our radar every single day like it has been for the last 5 years because we feel it now. We know it now. We recognize it now. And crap has gotten more expensive. So even if inflation is sticky and going sideways, it still means that prices are going up like 2 to 2.5%. And already stuff is expensive. So things still go up. Are you getting a 2 to 2.5% standard of living increase? Probably not. Depends on who you work for. Do you have more W-2s and 1099s? I don't know. Maybe, maybe not. So it's just prices are still going up. They're just going up slower. That's what inflation is. This is why it's such a big deal. I mean, obviously, it'd be nice to see that inflation is going to go down, but part of me almost wonders that the reason this went down so aggressively, and especially this big drop in March and April, was because the markets were also falling. That's a deflationary pressure. So anyway, we'll see. But here we are, sitting all-time highs. I think that we slowly grind for the remainder of the month. There's only basically 1.5 weeks left, right? So we get through this week with a couple Mag 7 earnings with Tesla, Google. Next week is Apple, Amazon, Microsoft, Meta. And we get to the Fed on Wednesday. We get to non-farm on Friday the 1st. We finish the month. We started a month. We also have the tariff deadline on the 1st. I'm not saying any of this is going to mean like the day of August 1st, what a big deadline. But the market could either melt up into that or start to top out and fall coming into it. Does that make sense? So we could have a market melt up into the end of the month, or the market could go sideways, and then starting in August, the market pulls back a little bit. It's still, as the markets always do, up, down, sideways, right? That's all it is. So, all right, that's that. Let's see here. For today, let's go a little top down. So S&P, NASDAQ, Russell, everything is up. Russell's down 0.1, almost break even on the day. Dow's up a little bit, 1/4, 1%. NASDAQ up 2/3, 1%. Russell up, or S&P up 1/3, 1%. VIX was down all morning from like 17 down to like 16.4, 16.5. Right now, the VIX is trading at 16.5. Dollar index. Dollar index down on the day. Here's currency strength. Japanese yen super strong today. Pound and euro equal. Dollar weaker. Decent. I mean, that's a good volatility move. So we have dollar yen getting way weaker by about 130 pips today. So dollar yen would have shown a nice red candle. Yep. So nice red candle turning at past support, becoming resistance right around that 150 handle, 149, 150 resistance. We called that for the last couple of weeks as it was running from 142 to 148, 149. What are the currency strengths? So Japanese yen pretty strong. How'd that turn the other ones? Aussie yen maybe less than 100 pips. Yeah, barely budged there. CAD yen barely moving. Swiss yen not much. Euro yen not much. Pound yen not much. It looks like the pound yen gapped lower. Is that real? So we gapped lower, tapped the gap, and headed down. Well, what did we start out with? Yeah, I see that move right at the open here. This would have been a 5 p.m. Sunday night open. Looks like the Japanese yen had a big spike up. MP says, what's a good hedge to put on right now with MES? I mean, how far are you willing to go out? How far are you willing to go out? I mean, if I were to hedge an MES out to the end of the year, then I'd probably look at some technical levels like this. Let's go MES, which is micro. Okay, so you have the S&P minis at ES. This is a micro. I think if you were willing to go out like 30, 60, 90 days, getting back to this area could be pretty reasonable for like an out of the money debit spread. That might be about it for the short term hedge. If you want some big asymmetry, you try to see if we pull back more or more. So kind of the if you want to make money on a hedge, this is probably the way to play it. If you want to go higher reward to risk, so like high reward, low risk, but you want like 10 to 1, 20 to 1, you're probably looking at this like maybe a 20 to 1. Maybe this one's probably playing like 50 to 1 now. So this is a low probability trade, but it can pay extremely well if we somehow have the market just fall back to April lows, which is super unlikely. But if it happens, that hedge is ridiculously good. So 1% that pays you 50%, yeah, that's pretty awesome. That would have a lot of downside protection. 90 days? Okay. So 90 days, I mean, if I look at a trade here for 90 days MES, I'm probably looking at more of like the 6,000 handle. So I'll go MES here. Okay. MES. I have a 60, 71, 88 day expiration. So I can go out to October 17th. October 17th. Maybe something in this, like, I kind of like the 6,000 handle. So if we did like a 6,000, it's going to be out of the money spread. Maybe a 6,000 and give myself a little bit of upside here. So something like that. I mean, it cost me $118 to make 800, maybe a little bit more. Let's say I'm comfortable with like a $250 risk. Let's see what that's going to cost me. So about there. Okay, so I could go a 6,000 long put, buy a 5,400 short put. So I create a 600 wide debit spread. It's going to cost me $258 to make potentially 2741. Again, return on capital is pretty good, right? 2741 is my max profit, 258 is my max risk. I mean, that's 1,000% gain. So that's about a 10 to 1, right? That's a good hedge. Now, it's also going to be a cost. Like, I pay $260, which means I could lose $260. So my plan on this trade would not be to try to make $2,700 on the trade. My plan is, if I can take a 260 risk and turn that risk into like a $500 winner, okay, maybe $500, maybe, I'm trying to think here, $500, maybe $1,000 on the trade would be a heck of a win. That doesn't take that much. In fact, I like this trade enough for at least the near term. I'm willing to sacrifice it. So I'm going to throw this trade in. Let me see if I can get filled here. $52 to $53 debit. I'm going to look at maybe this trade. So I'm going to try to risk like 250. So I do a 6,000 by 5,450, and I'm risking 247 to make 2,500. If I can flip this into like a $500 to $1,000 profit, I'm going to take that trade. All right. So I'm going to take this trade. 49.50 debit. Let's see if this gets filled. I'll try this for everybody. Buying power is pretty cheap. So 250. Let's see if we can get it here. So 49.50 not filling. Let's try 49.75. 49.75 is filling. So I'm going to take this trade. This would be a nice little hedge. If anybody's in my crash insurance masterclass, I'm going to take this trade and post this for crash insurance. Okay, I'm going to send this out right now, actually. All right, I'm going to post this for crash insurance masterclass, crash insurance, new trade, MES. I'm going out to the October 17th expiration. Buy the 6,000 put, sell the 5,450 put, 49.75 debit. Max risk is going to be 248.75. And max profit would be 2501.25. 2501.25 would be max profit. Okay, that's pretty inexpensive. I'm going to throw this in. So everyone's going to get some hedging here. Filled. 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 7634. Filled. Okay. 7671. Filled. Okay. couple more accounts here. Okay, so those all got filled at 40. Yep, MES is the symbol. It's a micro S&P E-mini futures trade. All right, let me edit this real quick. Edit message. This is micro E-mini S&P futures. There. That way it comes out. So if you're in my crash insurance, you're going to get that. It's going to say MES. Don't type in MES here. Okay, don't type in MES and trade Mitsubishi Estate. You want to type in MES and make sure you're trading futures. Make sense? All right, so now let's do the math on this trade. If I can turn 49.75, potentially if I'm risking 250 bucks to maybe make 1,000, that's a 4-to-1. So 49.75 times 4. If I can get this credit for 200 bucks, I'm going to go ahead and just set the take profit ahead of time and just take the profit. If I can take the profit, I'm going to take the profit. Okay. So let's see if all these trades here, as I go in account by account, I'm going to set a take profit around $200 credit. Okay. So max credit would be $550 on MES. So I'm looking to take about half the max credit because there's going to be some time in there. I'm not trying to be picture perfect in queue. I'm just trying to get a little bit of a hedge that helps me grab, I don't know, maybe $13,000, $14,000 in hedging. Helps me, navigate some of the short-term pullback if we have one, and grab a nice little winner. So let's see if this trade for MES, this one. So October. This one I just put this one. So this one I'm going to go ahead and set a take profit. Close at $200. So it'd be about $1,000 winner, right? So I pay, my max risk is $250. There's $1,000 winner if I get it. If I want to go after more than that, then obviously make a bigger credit. But I'm fine with that $1,000. If I want to go a net, let's see, that's 4-to-1. I think I'll keep it there. So 200 minus 49.75 is 150 and 5. So I mean, I'd net 750. I'm gonna go. I'll go 250. I'm gonna see if I can net $1,000 on this trade. So $250 credit is going to give me a net $1,000 on that trade. My max profit is 2,500. All right, so I'm going to set that at 250 credit. Same thing here for October. I'll set this one at 250 credit. $250 credit. And if we have a big fat spike in volatility, this actually might close out and exceed my credit. That's a possibility, even though futures market does trade 23 hours a day. The only vulnerability is really over the weekend. So if we have a big nasty move over a weekend, maybe August 1st to August 4th, just saying, maybe that weekend the markets show a lot of vulnerability, then maybe I can get like a little excess and maybe the thing like closes me out at like, 275 or 300 credit, maybe if I'm lucky. All right, I'm just going to go up the list here. 250 credit. 250 credit. Okay, just a few more here. All right, almost there. Just going to make sure all these are set to 250 pending orders. Okay, and final one. Okay, so now just double check all my positions here. There. So I should have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That is the blue. 12, 13, 14. There it is, 12, 13, 14. Okay, so trade is in, debit is in, credit is set, pending order. A little, 10 to 1 opportunity. If I can close it out for 5 to 1, I'm pretty happy with that. Fair? All right. Why MES? Because it's cheaper. I mean, if I did the trade in SPX, I'll show you it's probably more expensive. So if I go SPX out to, there's a bit more leverage involved in that one too, Larry. So if I went to October 17th and try to price together like a 6,000, okay, if I do a 6,000 by 54.50, okay, it's going to cost me, oops, so 6,000 right here. I mean, that cost me $8,000 to get in the trade. So obviously I don't want to spend that much. I don't want to spend nearly that much. So that's just buying a put. If I were to spread this, let's go to 5,500. Okay. It still cost me $5,000. That's way too much money to hedge. So I'm not going to spend $5,000 to be like, oh, I can make $45,000. Well, it's a hedge. Like I want this to cost me like a fraction of 1% to pay me, 2, 3, 4% downside protection if I can get it. So if I did 54.50, which is the same trade I have in futures, I have to pay $5,200 on my trade. It's like, that's way too much risk. Yes, I can make, 10 times that, but the probability of making 10 times that trade is slim. So I keep the cost effective hedging. I'm going to risk $250, which is nothing. That's like a quarter of 1%, maybe not even that. And if it can make me, 0.5 or 1%, it just helps me kind of ventilate some of the downside. So I don't have to take big drawdowns. I can have some gains. Make sense? All right. Have I looked at Delta? I did, but Delta already had earnings, so I'm not that interested in it. Delta is up here. I mean, the only thing I can see on Delta now with airlines would be, maybe some type of, I don't know. I mean, if puts are reasonable, maybe a put on Delta. I still don't like airlines at all, honestly. It was a nice pop on Delta, but I'm only interested if Delta's like back down here into the 30s again. Look at this fundamentally. Delta Airlines. I mean, you can look at most of the financials. Most airlines are just not that great, right? Earnings forecast to decline, high level of debt, insider selling. I mean, there's some upside to it. I mean, price to earnings is pretty cheap. Fair market value is up into the 60s. It's just like, I just don't want to pay a lot of money for it. It's also pretty, I mean, I'm not going to say it's low beta, but it's just one of those stocks. Like, it's a sector that just doesn't do that well. If we have anything in energy, airlines are really sensitive to it. Your beta is 1.29, so it's slightly more volatile than the S&P, which I don't love that, obviously. So, yeah, I mean, Delta's just not my favorite. And Delta already had earnings, so it's kind of over and done with. This week we have Alaska Airlines, which is ALK. ALK at 52. Again, I don't know what happens. It's kind of right back in this recovery zone. I could see like Alaska Airlines popping up into this like 60 handle, maybe 60 to 65, but I could also see it pulling back into like 45. I mean, I don't mind Alaska if we're in the 30s again, like low 40s or high 30s, maybe just selling some puts. I had some trades last week on American Airlines that I had puts based on the COVID lows. I was selling like a 9, 8, and 7 naked put combo, and I grabbed, whatever, $3 or $4 of credit and ended up making profit on the expiration last week before earnings. So Southwest Airlines, I mean, has made a pretty good comeback off these $25 lows. I'm just not that excited to be like long airlines. Spirit, JetBlue is still thorn in my side. I own this stock, regrettably. I would say begrudgingly, but if we have a squeeze to the upside, then that's pretty much what I'm holding out for JetBlue to see if this thing pops into like the double digits again. We pop up to 10. I think my break even is 7. So we pop up to 10. I'll just dump the shares. That's all. What about your DPP for tomorrow? Tomorrow let's take a look at it. That's a good question for tomorrow. So that is still running. We're going to have some more time in that trade. So waterfall, reverse iron condor, it's currently upside down. I need price either be above 63.20 or below 62.95. So if we can move, 10 to 15 points tomorrow, we're going to be good on the downside. If we can move another, 10, 11 points to the upside, we can be good tomorrow. So basically tomorrow I need price to go about 10 to 15 points one way or the other, and we'll be fine. So that trade should be worth hopefully 60 cents tomorrow. Or if I can grab like 40, 45, 50 cents out of that trade, that should be looking good for tomorrow. So yeah, we'll manage that one tomorrow, as well as hopefully looking at a fresh trade. Okay. All right, good stuff. Okay, MP, good call on the hedge. I actually hadn't had a trade in for a minute because a lot of my hedges are out to December, and I've got an August expiration that's probably garbage. I've got a September expiration that's probably garbage, unless the market does something exciting to the downside. If the market's really volatile to the downside, then I've got some hedges that'll work out really well and pay really well. But a lot of my hedges now, like out to December, are just waiting, and it's kind of like back to April lows protection. If we get it, I'm still going to finish the year very positive. So that's the nice thing is I can choose to kind of participate with this melt up, participate with this drift to the upside. But if something really, really, really bad happens, I still have a lot of downside protection with a ton of asymmetry. So I mean, this portfolio protection wise should be, I'm going to say, like fairly bulletproof. It's obviously going to come with a lot of volatility, but those hedges could pay out in a big, big way, and I could still maintain a lot of this value. So that's not bad. I mean, right, like the year started out around 1.8 million. So 1.8 million, 382 divided by 1.8. So I mean, the whole portfolio is up about 21.2% this year. That's not bad. I want more. I'm still grinding more. I'd like to push, 25, 30%. I'd like to have some steady income trades, just keep doing my thing, doing my grind. But yeah, I'd love to see if I can push this thing towards, 30+%, beat the snot of the benchmarks, and, continue to fight the good fight. So, all right. Yeah. So we'll talk about that tomorrow. Jonathan says, are you short the US dollar? No, I'm not. I'm not doing anything on the dollar right now. The only thing I'm holding dollar Swiss. So I'm still long dollar Swiss. And I don't love it. I really don't. I'm still long dollar Swiss with a break even around 84, and I'm looking to get back into this like pocket here around 87, 8800. The obvious trade for me is to be patient right now. So be patient right now, okay? And then see if this market can break the trend line, give a pullback, and then have some type of wave structure, find a pocket, find some structure, and turn the corner. Does that give the dollar a bid? Sure. If the markets go down, like stock market goes down, dollar catches a bid, then sure, we have a run back in these levels. Take a look at bonds for a second. Okay, look at TLT right now. TLT gapped higher up to 86. I did add another chunk to my TLT position, which is a diagonal spread. So TLT here, I have the 89 calls out to September. If it gets called away, it's not that far away. That could be a bit of like risk off. I don't really want to hang on a TLT that much longer. But I'm okay because I'm out on this thing for 2 years. UNG is another one. UNG is 16.5. That's my call trade at 14.67. That's August 1st. That's coming up next week on Friday. What other diagonals do I have? Look at this market, by the way. This market just faded and gave back everything it produced today. That's a lot of volatility for a Monday. I'm not going to lie. Close here. Market rolls up about 0.6% and gives most of it back. Market's only up 0.15. We're really right back to the open today. And I could see us kind of stalling right there, but not trying to catch the floor. And this dead zone, by the way, this dead zone that I can extend to tomorrow, I need to see if price can get either above or below by tomorrow's trading. So do we fill this gap tomorrow? Do we start pushing lower? This is just a melt up on a Monday to give it all back on Tuesday, Wednesday. I don't know. Like big earnings this week, I would say is going to be Thursday. Like Wednesday night to Thursday morning, that's when the market's going to be moving. If we have more follow through off of this little, U-turn, then pretty crazy stuff, right? Like this market came right back to where it started and it's essentially flat on the day. That is exactly why I spent all this time this morning talking about this guardrail trade in my daily profit room. Okay. If you were in that live session, this should make sense. If you come in my daily profit room tomorrow, we can revisit this. The market did exactly what the market makers should be having to do, which is not go too high, not go too low. And yes, it did silly things intraday. I mean, I was upside down at one point around $500 today that I ended up closing out for about $100. That could be right now. Again, hypothetically, had I just let the trades run for the next 10 minutes, I'd be up around. I'm trying to think. $3. So $300 plus another 184 plus another 190. I mean, net down in the day, that's a pretty good chunk of change. Again, if I didn't touch anything today, then the market did what we talked about this morning, which is it hit a ceiling and started to retrace. So 300 plus 184 plus 190. I mean, that would have been my max profit on the day. So at one point I was down about $500, had about $674 of profit here that would be done in the next 10 minutes. As long as price stays where it is, this is an easy win. But I grabbed a portion of that because one thing you have to do in a zero-day environment is manage risk. So I do, and that's why we have 90+% win rates, and we have defined risk, and we don't let anything go just crazy. And there's no point. There's no point in taking tons of risk in a zero-day environment. There's no point of taking crazy risk anytime. Risk defined. Survive it. Let the market do what the market needs to do. Don't lose more than you can't afford. So every trade I take is something that's like, fine, if I lose it, I'll lose it. At the same time, I also take trades with my Project Options Edge where we can flip it. Here's an example that I have on this account that was originally in my waterfall income service. That is a SPY trade with a covered call at 594. The SPY's trading at 628. So I'm still upside down in my call. I'm upside down about $304. Or I'm sorry, I guess it's $34. Okay. So I've given up, and this is okay. I've given up $3,400 in potential profit. Okay. However, this trade originally was down about $350 that I'm now up. Like if I let it get called away on August 15th, I am guaranteed. Okay, let me do the math on my break even here. I am guaranteed. This is right here. Tesla. Let me find it. I think I just type in waterfall. Yep. So waterfall, good. SPY and Q's good. There it is. This trade has a break even of 553. Okay. So 553.04 minus 594. So right now, if I don't do anything, I am guaranteed to take a $350 loser and turn it into plus $4,096. Okay. That's not a bad repair. So what could have been a loss, and woe is me. I can't. What a stupid strategy. I don't make money. Advanced trade management that I teach in my master classes for lifetime members of Waterfall. We flipped this thing now for a $3,700 net winner. Right. That's a big swing in my direction, and I'm going to keep doing this. I'm going to keep adding to this to make this bigger and bigger and bigger and bigger. So if I keep doing this until the end of the year, there's a good chance this might be $4,500, $5,000, $5,500 profit. It just depends on how good the premiums are. But I will keep doing this as a campaign trade. So anyway, Just lots of ways to get the job done. Just keep grinding. Just don't let trades. No one trade should be the reason that you can't afford to trade anymore, or that. I mean, I know heroically, it's like everyone wants to have that big trade, right? Who didn't? Who didn't want to buy Nvidia at $89 this year and ride this thing up for 100% gain? Everybody wants to, right? But the question is, did you? Did you buy it down here? Did you ride it up? I mean, look, I bought Nvidia and rode it from $90 up to the highs at 150. That's a pretty good trade in my world. Okay. The fact that it went higher, I guess my discipline is, should I have moved trailing stop losses? Probably yes. Because maybe if I used stop losses, I could have moved the stop loss here. And as it was going up to 150, I could have put a stop loss as I'm in here, put a stop loss in, and it goes higher, in, goes higher, in, goes higher. And then it goes up again in here, and now trail. I mean, just keep moving stop losses, and you're trapping in all that profit, which is great. But that's the best I can manage this trade. So once we hit all-time highs, I'm like, I'm done. I just got out of it. I closed it out for 150. I'm happy with that trade. That's a good trade. So did I put 100% of my account on Nvidia to make that huge run? No, I didn't, because nobody wanted to touch Nvidia when it was down 50% this year, right? But I had the courage to sell a bunch of puts, buy some shares, do some ratio spreads, and make a bunch of money on Nvidia. It's just one trade, And if it got me in trouble, I would have tried to repair it. So I tried to allocate the capital. I mean, the fact that this thing split, number one, it became affordable, and there's still a ton of volatility and leverage behind it. It's just been a great trade, So Larry says I made 100% on the Nvidia calls from last August. Good, man. That's awesome. You'll never get the lowest low, the highest high. Yeah, I know. So it's this. Think about the lion's share, right? If you have the lowest low and the highest high, then you're in like the 0.0001% of traders, which probably don't do that sustainably. But if you can take this chunk right here and participate with this chunk, you don't have to call the bottom. You don't have to call the top. You can avoid a lot of stress by guessing where the lows are. Don't do it. You can avoid a lot of stress by not guessing where the tops are. Don't do it. But if you have market participation to the upside and it works, or market participation to the downside, and you get this lion's share of the move, it works. You can make money. As they say, bulls and bears make money, pigs get slaughtered. So if you can make money here, make money. If you can make money here, make money. If you're taking trades here, risk defined. If you're taking trades here, risk defined. Not big trades, not big risk. Just grind, And maybe that's more my style. I don't mind being in the trenches every single day, week, month. My challenge is I sign up to trade January to December. I do the best I can. I have zero expectations. I'm just trying to read the market. That's the game I play. You read the market, right? You read the market with a slight bullish bias because the market historically is mostly bullish, right? For the last 50 plus years, it's been 72 to 75% of the market's been up. So why fight that? Why fight that trend? Why fight that probability? So bias is the upside, but discounts are fantastic. If you get discounts, you get pullbacks, take them. Have some cash to deploy. So that's still why I have all this cash in the sidelines. This is still why I have all this cash in the sidelines, because I want to deploy this at a better price. I don't love that the market is, 30% off the lows, and we have individual stocks 100+% off the lows, and I'm sitting on cash do I chase these highs? Because I'd feel like a fool, If I get in at these highs and the market drops 10%, I'm going to be pissed. If the market melts up another couple of percent, that's fine. It'll be annoying. I won't love it, but at least I have capital for eventually another pullback, So it's just a lot of patience, a lot of discipline. Sometimes good trading is no trading. Sometimes good trading is not forcing it, right? So anyway, we'll see what the market gives us. But today's an interesting day. This market has basically given us now, it's still green because of this gap, but we have given back all of the gains for the intraday trading. The market's now red on the intraday, and it's going to, we have 3 more minutes, so it's maybe going to stick to a slight green, 0.15, 0.3. It's what a crazy Monday. That's a lot of volatility for Monday, but also this is why I love Mondays. This is why I love the guardrail trade. This is why we trade daily profit play. This is why it works. So going into this, it's look, I've got almost 2,000 subscribers, and this market did exactly what we said it was going to do today. Use the guardrails. It did, right? It used the guardrails beautifully. We took advantage of that. Profit. So what's tomorrow? Let's see. Where are the guardrails? Are we have highs and lows? We'll watch them. What's volatility at? Let's watch the VIX. Daily planning. And then once you go daily, then I look out because the daily trade for me takes a couple of minutes to execute and then I just manage it. Should be pretty straightforward. The rest of the day is go through the portfolio A to Z, talk about some other strategies. So that's what I'm doing. I've revamped this entire morning schedule so I can offer more time with each one of my services and give a variety of strategies where we get the job done. I mean, I wish I could call this room whatever it takes, but I'm going to save that for later. Right? All right. Any questions on that? Is this making sense? Does guardrail trade make sense? X says if you can't take the crash insurance on MES, what other instrument? So if you can't take MES, does that mean you can't trade futures? So ES and MES are going to be the most cost-effective way to take that trade. The next one would be maybe XSP. XSP, if I took like a 6, this wouldn't be a bad trade here. XSP, that's a mini index trade. If I did XSP out to October, okay, and I bought, let's say, the 600. Again, it's an out of the money play, but if I buy the 600 and I sell like the 550 or so, so I can risk 500 to make $4,400. That's probably the more cost-effective way to trade it. So if you can't trade futures, this is like the next best thing. I'm risking 500 to make potentially about 9 to 1. So 9 to 1, do I have to make 9 to 1? Am I going to make 9 to 1? No, but if I take a $500 risk and I can turn it into $1,000 to $2,000 of profit, that's still a great trade. 340% gain versus 900%. Don't be greedy. It's a good hedge. But XSP is not a bad way to trade it. If you can't trade futures, that's not a bad way to trade. That's pretty cost effective. Right? There's also no assignment risk there. Like that's an index trade. It's cash settled. So if we have prices falling back to 600 or lower, this trade for 509 is probably going to offer $8, $9, $10 credit, which means you can turn this into like a 100% winner, maybe more. We can take some profit. Does that help? Okay. All right, good stuff. So let's see here. I'm going to add into Telegram discussion guardrails today. We added in for Crash Insurance Masterclass. I'll add here. Let me add this for the Crash Insurance Masterclass trade. I entered with MES. You can also consider XSP, mini index trade with nice reward to risk setup. So hopefully that helps. Okay. All right. So guardrails worked out beautifully today. Tomorrow in Daily Profit Play, we have a trade that's going to expire that we took on Friday. I need price to either be below this box or above this box. So if tomorrow on Tuesday the market's sideways, well, we'll take our chances. But I think we have some more follow through, whether it's going to revisit these highs again or actually see the VIX go up and try to go lower. Because what's interesting here is notch record highs, but the market, I mean, you can see the way the market closed today doesn't look really encouraging to hold these levels. So I will see if this 6,300 level, which I've said for the last couple weeks, is a key resistance level. There's lots of call option volume. There's lots of resistance levels here. It is positive gamma at the 63 to 6350 zone, which means that's kind of like roadblock, hurdles. It's hard for the market to keep going and taking those out without having some type of, it's just a lot of people selling calls right now and probably buying puts to make sure there's some downside protection. We go back to this put call. Where did I take that put call thing? Did I delete it already? Oh, here we go. So put calls. I'm not saying this is the point where I would just want to start, dumping shares and dumping positions and get, short the market. That's silly. But this call option volume ratio is pretty extreme. We're getting in the territory like this has been all call option volume for a while now, where usually you see like there's some red in here, kind of spend some time in the middle. But when this is like below, all these levels here, it's like these have been some pretty good turning points, by the way. July of 2023 was absolutely a turning point. December 2023 was a turning point. Let's see here. June, July, August of 2024 was a major turning point. December 2020 was a major turning point. So, it's close enough to take a hedge, close enough to justify like, yeah, I'll risk $250 to try to make 1,000 or more, but it potentially pays me like $2,500. So, all right. I think I'll wrap it up there for today. So moving forward, I just want everyone that's watching this video, that's checking out, my final hour sessions, if I do them live or post videos, post updates on my Discord, Telegram, on TradingView, all my socials. Every single day, if you'd like to join me, I'm live now, 9 a.m. for everybody. So my daily profit members know the deal. We're still taking trades in the morning. Those alerts go out to those members in Telegram. We're going to sprinkle in other education, other courses, other touch points. Those classes, those members that will get those alerts are getting those alerts in their Telegram, in their classroom, right? But it allows me to have the time with everyone where I have like an uninterrupted block of about 2 hours where I can just focus on the day's flows, day's levels, get some trades, prune the portfolio, and we can talk some strategies. So there will be lots and lots and lots of education, knowledge. And, as I shared with everyone this morning, the point is I trade whatever it takes. I don't care what strategy works. I really don't. I just want to make money. If I'm wrong, I'll be wrong and I don't want to worry about it. Option trading has made me a much better loser because now when I lose, it's already predetermined. It's already risk defined. I don't have to have like, oh my God, I can't believe the market did that. This thing just ruined me. I hear that way too much from traders, right? Everybody does the right thing, right? Everyone's like grind, 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 love, 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 love the strategies. And then something silly happens like, April, something silly happens like December of last year, something silly happens like July to August last year. And I see traders that do this. I literally watched a friend of mine last year with $500,000 in gains for the year give back all of it in August last year. That volatility event, when we spiked up to 60 over a weekend, that spike in volatility ruined $500,000 profit because this was a trade at like undefined risk. He was way ahead of me. He was up almost 40% for the year, but gave back all of it and actually finished the year like negative. He lost money for the year because of undefined risk. Not me. It's like I was trailing most of the year. Trailing most of the year. But through the rest of the year, that's where I finished versus somebody else. So what would you rather have? I know I can't celebrate like huge monster winners and oh my gosh, I just make money hand over fist. But if it's a solid couple percent a month or a solid, 20, 25, 30% a year, I'm really happy with that. And it's not easy, and it's not glamorous, but I do it to get the job done, So, all right. That's it on that. Forex, all I'm going to do, Nick's asking about Forex. I'm just going to show you the currency strength for the day. We'll wrap it up. So currency strength, all we had was a big move in the Japanese yen and a weaker move in the dollar today. That's pretty much it from currency land. So if you traded the yen, you had some intraday volatility. If you traded the dollar, maybe some intraday volatility. I still don't see like big position trades on the dollar at all. I think that we have to watch two baskets really closely this year. You watch the Japanese yen basket and you watch the dollar basket. If you want to see a big macro trade or a big fundamental trade, watch the yen, watch the dollar. It might not amount to anything other than chop this year. But if we have a big fundamental slide and a technical setup on the yen, the dollar yen has all of the technical potential to go to 120. It's trading at 148 right now. If we break the floor at 140, we're going to 120. I think I'm highly confident in that trade. But I will wait and wait and wait until there's better confirmation, and then you have 2,000 pips of room to trade. If the dollar index is going to stay off these lows, I think the dollar index catches a bid. A little dip in the stock market, a little risk-off trading helps the dollar a little bit. And what does that do? Well, we get a risk-off tone in the markets. We see the dollar catch a bid, the bond market catches a bid, equities. Like I said, I keep using the word ventilate a little bit because we just let out some of the air of this stupid complacent market that just keeps melting up higher. So if the market drops, bonds catch a bid, dollar catches a bid, we get some dips in the markets. It should happen. So watch the dollar basket, watch the yen basket. I think the rest is take good technical trades. I personally love the Aussie New Zealand, the Aussie CAD, New Zealand CAD. I'm still in Swiss pairs for positive swap because the Swiss bank is at 0%. So I'm going to take some positive carry. I'm going to hold some of these positions for efficiencies. Gold still hasn't made a pullback yet, which the Swiss is kind of tied to it. So if I go to XAU, gold caught a bid today. I think gold is still not going to go too much higher than 35. I think gold still pulls back to the 144 200 moving average. Okay. So it's just a trade. So Forex is still on the boring side right now, which is fine. But I will say this, August and September, this time of the year, things get a little less boring things get a little bit less boring. Be careful. If you've been making money in these low volatility environments, that's great. But I'm warning you that if you make money in these environments, just don't be surprised if the market has some type of this or this or this or this or this or this. Maybe that, but probably not. But even that, even a spike up to like 20 to 30 again, it's going to catch traders' attention. It's going to be volatile in the stock market. It's going to be volatile in the currency market. Just be prepared for something like that to happen. It wouldn't surprise me at all in the next 30, 60, 90 days that we have some type of move in the VIX that gets us up to the 20s or 30s again. And then the market from there is maybe a good chance to sell premium. Okay. So we'll talk more about it tomorrow. All right, buddy. Hope you had a good day. We ended up making some good money today on Daily Profit Play, the Daily Plan Room. I know I probably shared a lot today in that session, but this is why I posted this. It's a screenshot, right? If it looks like chicken scratch, it's because you weren't in the live session. I think I did a pretty good job of making it make sense, bit by bit, sentence by sentence. Little lessons here. It's a guardrail trade we talk about. You can see how the options market moves. You can see what the brokers and market makers price in every single duration and how this changes with volatility. So made some money on the day. It would have been a great day to hold on to all those trades. It would have been up about $650 today, but I'll take my 100. I'll take my 100 and I'll take 100 250 times. If I can make $100 a day on 250 days, great. I'm happy. So do my best. All right, buddy. I'll let you go. See you tomorrow. Daily Profit Room is open. If you'd like to join me, let me post 2 links here. Okay. If you'd like to join me, this is my all-purpose Telegram. So Telegram is right here. So copy that link. This is my Chris Pulver Telegram, and also my Discord, which will be good for another 30 minutes. Let's go Chris Pulver Trading. Invite. This link is good for 30 minutes. So you can just join it live before you leave. Okay, and this is Chris Pulver Trading. Discord. There you go. One quick note on Discord. If you come to my Discord channel, read the education updates. This is where all my services are summarized. So trade, if you want to trade indexes with me daily, you want to trade the indexes for swing trading, you want to trade for some high reward to risk, you want to trade earnings and news reports, you want to have a scanner and alerts to go with it that trade high volatility expansions and contractions. You want to have hedging insurance, like I talked about crash insurance today. Okay. Pulver alerts are out there. Some legacy education with market structure, technical analysis, market patterns, symmetry, or some option trading. $27 quick course, $97 full course. It's there. I want to get a lot of education. These all come with live trading. You like to live trade with me, if you have alerts with me, those are your services. Okay. If you want some education, all of these have education, tons of it, specific to the strategies that I trade. These are the big bonus educations there. If you jump into my Discord, read the rules first, because I don't send direct messages and I don't send friend requests. If you get that stuff that pops up in your server, it's not for me. You want to talk to me? Talk to me in the free group chat. Talk to me in the FOREX chat. Talk to me in stocks. Talk to me in options. Okay. All right. Aggie asked a question here. All right. So this is where I talk to everybody. Free group chat, FOREX, stocks, options, futures. When I post something for analysis, I do a lot of videos through TradingView. I'm one of their editors picks oftentimes. So if you want to follow me on TradingView, I just post it here in my analysis section. I post a link. It's in my Discord. It's in my Telegram. So I try to share that on my socials as well. Cool beans? All right. Sounds good. So come in, say hi. A couple new followers. Great. Build the community out. And that's it. You know where to find me. Read the rules. Just know I'm not sending friend requests and scamming. Please report that stuff for me. Please flag. Please kick. Please ban. That helps me out. Just keep the integrity of the channel. And for sessions like this when I'm live on YouTube, hit the thumbs up button. That helps a ton. Right? Support the content. Support the channel. Support the services. I appreciate it. All right, buddy. Thanks a lot. Let's do it again tomorrow. Bye.